Good morning from Chicago traders. It is 8:01 a.m. Chicago time on Monday, the 15th of March, 2021. This is episode number 1954. It is non-farm payroll Monday. Monday after what am I talking about? It wasn't non-farm payroll Monday. I got the wrong note sheet. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. What I wanted to say is it's rollover Monday. Big thing you need to remember this week is that we are in the middle of the roll. It's quad witching Friday this Friday, and it'll have an impact on what we see in the market. It'll definitely have an impact on our volume until about Wednesday close. By then, we will have had most of the roll take place. In addition to that, just a little twist, the U.S. has moved, the U.S. and Canada, North America essentially, has moved to standard time. Standard time, and Europe is still in daylight saving time. So the difference in time between Europe and the US shifts by 1 hour. Europe is closer to the US by 1 hour for 2 weeks, meaning the cash close in Europe is now 10:30 Central, 12:30 Eastern instead of uh, it's 11:30 Central, 12:30 Eastern instead of 10:30 Central, 11:30 Eastern. And again, that goes on for a couple of weeks until March 28th. So just be aware of that change. Um, Other than that, it's a market that has been going sideways really for the session, a pretty decent range. Let's take a look at our convergent trading pre-market summary sheet. I'm not feeling 100% today. Really didn't sleep well at all last night. So bear with me here a minute. Coming into this morning, we see a pop higher in silver. We see that that's the leader today. Silver's up 1.12%, up 29 cents. Gold is up 0.5%, 0.5%, up $8.60. Gold again on above 1,700, the 1,700 figure. The bonds are up. The euro stocks are higher, but only by a little bit, 7 points. The U.S. dollar's up 15.5 cents. The Dow is up 54 points, or 0.17%. The Bund is up 22 cents. The 10-year note is up 3 big ticks, and the DAX is up 9 points, which is about half a rotation. Crude is off. Crude's trading at 65.15 in the April contract. In the April contract, down 0.7%. Crude is the weakest of the bunch today. The S&P is down just 1.25. We're seeing a mixed to slightly risk off posture this morning. That's what we're coming into. Looking at what is on deck again, the yields, treasury yields, and the yield curve is front and center. Front and center along with some relatively low importance figures. There's not much for me to contribute here other than to say that you should be trading the June contract now across pretty much all U.S. Indices and all treasuries. We're in the June contract. You should not be in the March contract anymore. The June contract traded 172,000 contracts overnight. We've had an okay range. We've had 23.5 points. Nothing dramatic, nothing too terrible. The profile's mostly balanced. It's got several Several we'll go over. It's got some high volume nodes here and there, but really a nondescript session that we're coming into today. Again, it's Monday of expiration week. The roll continues in full force currently, and I would warn you that statistically, not only for myself, but for all the traders that I've ever monitored and who have worked for me and those that I know about, this is not generally not a good week. So what I would do if I were you, and what I would advise you to do if you're one of my traders, is to just simply follow your plan, but be patient, be picky this week. So, and again, because of rollover, we're not able to count on the delta, and the volume is likely to be deceptive because calendar spreads are in play. Let's take a look at what was expected on Friday. Let's switch this to full screen here. Friday, we were opening at the bottom end of Thursday's range. So there's Thursday's low. Here's Friday's open right here. The primary expectation is to poke into the range and then fall out and come back in. The secondary expectation, which is basically what happened, is to fall down, drop lower into the high volume node there, the MC point of control, and come back into the overnight point of control and start to work itself back into the low volume node. Expected this to go up to around 30 on Friday. Here's what actually happened. Friday opens up in an open auction. We see it tap down, up, push into the prior range. So we had it test lower, then it finally tests again by a tick. It takes out the prior low by a tick. This is a one tick test. Comes back into the range. You can see that it's pretty much trading inside and crisscrossing the opening swing. Not much there really to trade off of. Very scalpish. We finally push the IB low by a couple of ticks. Not quite a range extension. Come back into the mid. Notice the mid VWAP, and at this point, the point of control are on top of each other, which tells us immediately that we need to just chill. We need to back off here a little bit. The market is very, very balanced, and it finally pushes the opening swing, the IB high, giving us a neutral day, and it starts to work itself into the 30s right up here. The expectation on scenario two is it would come up here. It pushed to 39.38, finally taken out the overnight high that day, and basically completing the week inside of Thursday. So completely balanced. We're still very much near the all-time high. The delta, not really attentive to it at the moment. We've got to keep a critical eye on the delta. Let me see if I can pull up the roll. 1 second, see if I'm logged in. No, I'm not. Give me a second. So we can see the condition of the roll. I normally post it. Boy, I'm really dragging ass this morning. It's just like I'm having a hard time just focusing. It's a very busy weekend. Still waiting for the website to load. Here's what I'm looking at here. This is the S&P roll, the E-mini roll, and you can see that out of about 78%, we've done about 40 of 78. So that's the pace of the roll right now, giving us about 51% complete, as you can see. So the roll is proceeding forward. We expect it to be done, pretty much done on Wednesday. It's likely to be 90-ish, 95-ish% done. and that's a relief once that's done. So that's what we had on Friday. What do we have in the on the open? On the open, we gap up a little bit, test up, test down, push towards the all-time high, which is 39.49.50 in the day session. Almost get there, rotate back down and fall back into the range, come back up, put in a higher high, and then we swing all the way back down. This is basically a market that is testing the extremes on both sides, and it's likely to continue to do so coming into today's session. So that's where that stands today. I really don't have very much to contribute here today. I don't want to overspeak or just keep you here, but in general, this is just clear indication that caution is to be exercised today. The daily, we had an interesting week last week again. Higher lows, higher lows, higher lows on the daily. We breach the 3902, which was 3912. We breach the 3902 right up in here. The next day, we make a new all time high, higher low. We breach that low on Friday and we end up balanced. So this looks to me like, the weekly is starting to turn up. We may be one time framing again on the weekly for new all time highs. We pushed against 39.50 last week in the June contract, right up against the mid century figure. And of course, we have all kinds of play with pinning and pegging on the options expiring this Friday. And as we push into this significant 39.50, we're likely to see a lot of delta hedging and a lot of action in the futures, which again is a hedge product. So what we have in these 2 days here is balance. We built this profile up here right up against the prior high, the old high at 39.35 and a quarter, adjusted for the June contract. So to me, today is really, I'm going to say it again, today is a good day to just chill. Just take it easy today. It is not the ideal situation. The time change plus the roll going on against new all-time highs on a pretty undecided or indecisive trade on Friday. To me, it's a good time to just take it easy. We're likely not to see follow throughs on breakouts. We're likely to see the market kind of jacking people back and forth, back and forth. Let's not be those people who are donating to the market this week. Okay, so word of warning. Word to the wise, it is not a good week to be aggressive and to up your size. If you're going to up your size, wait till next week once the roll is done and the noise has cleared up a little bit. Let's take a look at what's expected for today. Let me turn on the stock zones, my master levels, and let's take a look. Do what you want, of course. It's your trading plan, it's your account, but that's what I talk to everyone here like they're prop traders. So what do we have today? We have this kind of sideways with an upward skew. Today, this morning, I'm looking for the market to be it is relatively balanced, a relatively balanced market. The overnight inventory is about 60% long, nothing significant. I'm looking for an open auction that tests back into a little bit more into yesterday's range. Looking for this test of the 39.24 or so. This gets us, we tested it overnight, but we're likely to tag this overnight low, get into the cluster, the acceptance area of Friday, consolidate down here before we come back up and start challenging the overnight point of control. Really not expecting much range or much volatility today. Um, so we'll see what happens, but that's the main expectation. The secondary is a push into the overnight point of control, consolidation over here, a test of 49.50, poke through, come back in, and finish up right in the middle. Not expecting the market to push directionally. We're on the edge. We're on the edge of the Friday's high, um, and we took it out overnight. But so there's a slight upward skew as a result of that. But overall, really not expecting the market to push away directionally, one or the other. Okay. Good luck, everyone. I'll catch you tomorrow morning. Take care.